Right, evening ledges. So I put my account on the screen so you can see that I haven't actually traded today. The last execution was yesterday, which you can see was the euro dollar. So this is when I put my original buy limit order in. Then I told you that I felt that I was going to miss it, so I put a stop entry order in, cancelled the original order, and got filled on the buy bet, modified the stop loss, took profit. And then this evening I've cancelled the dollar Canadian order that's above market, only because we're so far away from it now. Normally I keep those orders in, but I'm not going anywhere and I'm on top of things, so I'll just put it back in if we get near it. But for full transparency, I've actually cancelled that now. I just wanted to pull the account onto the screen just to prove that I haven't traded, because I'm going to tell you I haven't traded, and I'm not sure that everyone will always believe that, because there have been what looks like setups that I would ordinarily trade today. And I think it's important to show, because someone will probably ask me if I bought the euro dollar. Let me pull that onto the screen. I'm preempting that someone will ask me if I bought this when it was extended past ATR into the head of the hammer that I bought yesterday. Stop loss below the low, and if I had done that, it broke that low by a pipette. I wasn't convinced that the length of this wick was enough of a rejection to stop this absolute rout. So someone could have taken that and possibly could have survived it, but that aside, I didn't take it. When you've been doing this long enough, your gut instinct kicks in, and you can just sense that there's going to be more fuckery than a whorehouse in Tijuana, which is what I sensed today. Someone else asked me via Twitter DM whether I did my conkers in the New Zealand dollar, and as you can see, I didn't. The level they were talking about was this last high pre-break here, and again an overextension of ATR, so looks like a classic mean reversion trade. It's not a bad level, but it's the Kiwi. And if you think I'm letting that notoriously dirty bitch ruin my good week so far, think again. But in all seriousness, it just felt like everyone was just rushing for the exit on short dollar positions, and I didn't want to stand in front of that even at good levels. And on this particular pair, I felt there was the possibility that longs would be caught from the weekly swing high failing, which you can see I've got marked out. And not only would longs potentially be caught just under this, but shorts probably wouldn't want to cover because they likely feel they've got the market by the balls now it's lost that key level. So that, combined with, I guess, good old-fashioned instinct, kept me out of that trade. If I even get a sniff of something that I don't like, I stand aside and just wait, because there will be things where you cannot frame an argument in your head not to take them, and those are the times that I like to strike. And yes, that's going to mean a lower frequency of trades, but in the long run it pays me to do so. So no, I didn't take the euro, I didn't take the New Zealand dollar, and that's that. Haven't really got anything else to say regarding that. I wasn't watching this afternoon when crude oil set up, and it's actually not a bad trade at all. I just quickly bring it onto the screen. If you have a look at crude, remember it is coming off of the low of this shooting star, which I'm still using the acronym of LOSS, but we're going to change that to BOSS because it's so much better, bottom of shooting star rather than low of shooting star. But it was coming off there, and then as it started to break down, you could certainly frame an argument for taking the break and rounded retest of this structure here. So you see when it really starts to extend lower, reverses back into the last low pre-break there, and then rotates really nicely from that. Even though I actually wasn't watching crude oil at the time, I'm not sure I would have taken that, simply because a stop above the thrust, even though you can see you would have survived it and got a fantastic R out of that, that kind of stop into these lows would not be ideal for me, and there isn't a clear thrust behind it. So in situations like that, I'll usually look to see what price action offers me on the hourly time frame, and by the time you get this bearish engulfing, it's gone considerably far enough that you're probably not going to want to try and get in there with a stop beyond the extreme, certainly when you're looking at these lows, just below market. So well done to anyone that got that, but even looking at it with hindsight and seeing that I could have got away with it, I can be honest enough with you to tell you that I would not have traded that. I like tight stops, but the stop has to be out of the way of structure. I don't want to stop out into any zone where there's lows in there, even if they're just overnight, potentially weak lows. So that's my case for not trading the crude oil, even if I'd seen it. What about dollar Canadian? No, I didn't trade that either. You're talking about short. Here, at 7 o'clock at night, when it's not likely to go very far and ATR is going to reset? Nah, not one for me. Earlier in the day, if that had set up, yeah, not bad. Not bad at all. But here you're at the mercy of it just drifting and then ATR resetting, and you're going against a failure of a big low with a decent up move that's managed to get back above key support lows. So I'm not saying it won't reverse. I don't want to scare you out of the position if you're short that, but it's just not good enough, I just keep going and going and going until something says you've got to fucking trade that. It's too good to miss. And I can't frame an argument against it. If I can't see anything wrong with it, then I have to take it. But a lot of the times you can see things wrong with trades, you can argue against them, which is something I'm going to do tonight, because a student reached out to me and they sent me a trade and I really just want to review it. That's the aim of tonight's session. I don't think it's going to take particularly long, but I just wanted to review this setup, and maybe many of you wouldn't have traded this, but nonetheless I want to cover it just to give my views on why some things that seem absolute no-brainers to some people just aren't good enough for me. But before we get on to that, the plan creation session is on Sunday. And I had said that tonight I wanted to hold a workshop that goes through some typical trades from my playbook. And I was sitting here going through my journal and I was pulling up examples of trades, and suddenly I thought to myself, am I really going to sit here showing examples of setups I took weeks, and in some cases where the setup's rare and doesn't appear very often, months ago? So I thought about it, and I came up with a better idea, another little change to the format, and I'm hoping that you like it. But I thought, let's extend EFL for a while. Rather than me just finishing up next Monday and fucking riding off into the sunset, let me stick around for a bit with you. Kind of. On the website, you're going to see that I've made a change. You'll see my playbook. Now, I've included this, and I've listed most of the setups that I regularly trade. It's not all of them, but it's most of them. And I decided that going forward, I am going to populate this section for you with at least one example of each of these setups. So either it's going to be a live execution, like you saw in the euro dollar, or in some cases, if that setup just doesn't present itself, then I will post a walkthrough of a previous trade that explains it. Now, obviously, I'm not going to charge any extra before someone fucking panics. I'm just going to extend the time that I'm posting content from obviously the 1 month that you signed up for until this has been fully populated. So you'll see the page will keep updating with more content past the final session, which is on Monday. That will be the official end of EFL, but again, I will just keep posting content to the website so you can see up-to-date live examples of all of these main setups from my playbook. Now, I don't know when these trade setups will occur, and I don't want to keep tweeting, hello EFL members, check the website for a new trade video, because that sounds like fucking marketing and it's gross. So I would advise you to just check maybe once at the end of every day, or probably better at the end of every week, and you'll see the content will build out. And yeah, obviously I'll throw in some foul language and some jokes as well. I mean, I know you'll miss that, so I'll try and throw those into the execution so you get some comedy. And I think that's a much better idea. So you can see how I'm trading these setups now rather than, oh, I did this a few weeks ago, I did this a few months ago, and we're scrambling around with fucking market replay. Now, one thing I would say is, interestingly enough, many of these you'll already be aware of, even if you don't know it. So, as an example, the first one, the higher time frame bias of the SFP, you've already seen me explain that in terms of dollar yen. You'll remember that we've been over that in the session and said this was an SFP and this was how I was trying to get into it on the hourly. I didn't end up getting in, but I pointed you towards the bias, where I thought it was going to go, where I was looking for bullish price action, and ended up not getting in because it's set up just ahead of the news. But again, it's something that we've covered. If you look at the next one, higher time frame bias of a spike, which, again, I use spike interchangeably with hammer / shooting star, but the dollar yen was also an example of a hammer. In fact, it's what I call a cross candle. It was a hammer and an SFP. So you already know how I identify and trade these, and you've seen me discuss it live, but I'll get you a live execution on it. You haven't yet seen a range engulfing setup, but you have seen me already discuss the higher time frame bias of inside day failure, and who could forget that, because it was in fucking BTC. So remember, this was the setup where we had this candle here and we were getting long in this area here, preempting inside day failure. It actually closed as an inside day failure, if you remember, and I'd sat on the bid trying to get more into the position, but it didn't actually pull back and give me that fill. It was over here. This was the day it ended as inside day failure. I was bid here, stopped below this thrust. It didn't pull back, and then it went straight to target. So when you look at this, an inside day failure, you're already familiar with it. Preempting inside day failure, you're already familiar with it. In fact, that Bitcoin trade covered this as well, which was a last low pre-break trap. So again, just going back to it, you can see this was the last low pre-break. The market thrust up through it. Shorts are trapped, and I told you it returns to the low of the last low pre-break, and that's where you look to key off. And of course, that trade was so fantastic because not only did we have a high probability level marked out that the market was very likely to react from, but we also had the potential for shorts to be trapped underneath the inside day low. And then we knew if it turned into inside day failure, we had a decent target on it. That Bitcoin trade was probably the best trade that you've seen on EFL. I'm glad it was in Bitcoin because I know I got a lot of crypto traders in here. So moving on, pattern failure. We've discussed, I told you I did my arse in gold. That's when the price returns to the head of a hammer and closes through it. So here was the hammer, price thrust above it. You're expecting a reaction from that point. When it closes below, which it does there, it often visits the hammer low. And you'll remember again, I've discussed the entry into that, which was shorting at the low of this hourly spike, and I got on side, and then it ended up pretty much scratching it. So again, I'm going to populate these with examples of trades, but I'm just kind of making the point that you're already familiar with it. Preempting a range break, the long that you saw me taking gold was exactly that, looking for the break of all the range highs in an uptrend. Mean reversion, you're super familiar with by now. The euro dollar trade I took over FOMC that I called a long time in advance, that was mean reversion. Me getting bent over like fucking a rapper trying to sign a deal with P. Diddy, that was also mean reversion that didn't work. The cable trade, I think the first trade we called in EFL was mean reversion. It worked beautifully, but I ended up cancelling it, and that was a good example of me looking at the price action coming into the level and deciding to cancel it. So you had an example of that. Level to level trades where there's no higher time frame bias and it's not mean reversion. I think we discussed quite a few of those in Bund yesterday. Yes, it's Bund and down on the 5 minute, but the same principle applies on the hourly. We haven't discussed any gap trades. We have covered the weekly open test. That was the recording I posted earlier today of the execution I did yesterday. And we've talked a lot about open drive failure, but you've not actually seen me trade one. But again, the whole point of this was just to kind of tell you that yes, I'll be populating this, but you should already be familiar with these. So that's the plan, and that essentially saves me having to be going through a load of setups from ages ago, going, so I traded this fantastic IDF 3 weeks ago. could you explain why you never look at the 4 hourly time frame? There's no specific reason. It's not that it doesn't work or anything. It's just that, I started out learning to read price action from the weekly and daily, and I used to just trade based on those two time frames. I'd take positions much like you see me doing on the hourly, and as you can imagine, my trade frequency was just very, very low, and you needed so much patience as well to be able to run things. So I decided to bring it down to the hourly, and I just skipped the 4 hourly in the process and never looked back. A lot of people have told me they trade the 4 hourly, they love the 4 hourly, they use it for context to bridge the gap between hourly and daily, and I mean, that's absolutely fine. There's no right way and wrong way to do this, in my opinion. Anyway, in terms of tonight, I wanted to address a question I got today, and I thought it was a good opportunity to go over a setup that a student took. They took a loss on it, and I'm going to talk you through what happened here and what they said to me and my thoughts on it. So they were talking about Euro JPY, and this is what they said to me. I'm going to take the ATR off the screen. So they said weekly is an engulfing candle, which is one of the setups that I do trade. You haven't seen me trade this on EFL, but it's an engulfing, which is where you take the candle before, and if you have the candle after making a lower low and closing above the high, so it's fully engulfed but it closes beyond the high, that's a bullish engulfing. Reverse for a bearish engulfing, for example, up here. It takes out the high of the previous day, closes below the low. I think engulfings are normally taught with less rigid criteria, and that an engulfing, for example, would be considered this one. It just has to have its range from high to low, engulf the previous candle, so some people would call that an engulfing, but for me that isn't. For me, an engulfing has to take out the low and close beyond the high for bullish. So this student writes to me and he says, look, the weekly's an engulfing and it closed above the last low pre-break on the weekly time frame here, so that looks bullish. And he went on to say, and I'm slightly paraphrasing, I wanted to see some real signs of strength. So down on the daily, I was looking at these lows over to the left. I could see quite a lot of lows coming in around this area here. You see this low, and this low, and this low, and this low, and this low on these different days. And I really wanted it to clear all of these lows, because I know that you look at prior lows when the market's trending up as potential sticky points. So you really want to see it clear it to be totally bullish. So I looked at all these lows and I marked out the absolute highest low that I could see, which I think he marked out that candle there. And he said once it got above that, it really looked bullish. So he said I then came down to the hourly time frame and I saw it had broken out of this range, so I went long here, the blue line, at the last high pre-break, which I felt was the last high pre-break of the entire range, and I put my stop below the thrust candle. I'm not sure whether he meant this one or that one, but he said he put his stop below the thrust candle, and I got stopped out. And then he added, what the fuck is going on here? I'm at my wit's end. I've done 10 Cocodamol with a bottle of vodka, and if you don't fucking reply within 10 minutes, Tom... No, that part's a joke. Anyway, right, so he's got caught, he's done his arse, but that was how he reviewed the trade to me. He was sending me all these screenshots, and that's how he broke it down. So let me break down each of those points and tell you how I see this in my head. And don't forget, I'm very, very critical, because I don't like losing money and I don't like being vulnerable to the other parties in the market that are trying to take my fucking money. But here we go. So the first point, weekly is an engulfing and it closed above the last low pre-break. So to me, that looks bullish. My answer to that is agree. It looked bullish. Down here it looked fucking bullish. We're a point higher, mate, where you're buying it. That's the first thing I would say. This was the point at which you might be looking for a reaction, but now it's moved considerably away from there. So that's just the very first thing that's crossing my mind. Let's come down to the daily. So again, he's saying I wanted to see some real signs of strength on the daily. So I looked at all these lows to the left. I marked out the highest of the lows and I waited for the market to break that as real confirmation that it was strong. Now, the first thing I'm thinking about there is you're looking for too much confirmation. It's like you're getting bullish only after it's gone absolutely fucking vertical to the upside. And let me bring on paint for a second. By the way, I am going to take the piss here. But, I have seen people do stuff like this before. So, you've got a level. And then the market goes down and it's looking like this. And, maybe you've got something like this. Okay. So the market starts coming up and it goes through the last low pre-break. All good. It's looking bullish. But hang on a minute. We've got these two highs. So let's just see if it can clear that. Okay, it's cleared them, looking good. Now there is a high over here and it's quite a steep swing high. So let's just see if it can clear that. Oh, it's got up through there. Okay, this is looking really good now. This is the high that tested these lows. So let's just see if it can get through that. Oh, it's got through them. Now, if it clears that double top, wow, this is going to be looking good. Bullish, I'm fucking bullish. Buying. It's Forex, it mean reverts. Now, the guy that sent me the screenshot of his trades, I am taking the piss. I'm not saying that you were doing this exact example, but that thought occurs to me. Like, I see this drawing out in my head. There is such a thing as waiting for it to do too much. And you've waited for it to clear a last low pre-break on the weekly. You've waited for it to go absolutely vertical through all these lows. And now you're getting bullish. I feel that you're waiting for too much confirmation. But here's the kicker. Have a look at the daily candle. It's an inside day. Let's mark out the high of the inside day. Let's put that in yellow. And now come down to the hourly. So the market's gone vertical. It's broken out of an inside day and it's tagged its ATR. So it's done its average range for the day. Broken out of an inside day high, which we know can often lead to traders getting caught. And you're buying the very first pullback with a tight stop. So I do understand why you thought it was bullish, because going through the points I can see what you're saying, but you've got to find better examples than this, man. Now, hold up, because I haven't even finished yet with this. As if all that isn't enough, look at this candle, that candle there, which is when you get filled at 1400. Euro JPY, just if you didn't know but you should, is made up of the cross between euro dollar and dollar yen, which you can see here. So look at the 2 o'clock candle when you're buying euro yen and look at the fucking euro dollar. And look where that's occurring off of a weekly swing high. It's literally swing failed in the candle prior, extended higher and then rejected again. So you've got now 2 large rejection wicks and 2 hours that it's failed to hold above a weekly swing high. That is not looking fucking good for the euro side of the pair at all. Now, have a look at the dollar yen at 1400. You're here. It's having a little bit of a pullback. Maybe it might go higher. Now, it did. It did extend higher. And to be honest with you, I had an inkling that that was actually going to happen. Not that I traded it, but because, have a look at yesterday. You had such a bearish looking candle. It took the low of it out and then just came back so violently that you've got to be thinking that's going to take the high. Like, stops beyond that are very, very vulnerable. So the dollar yen side of the pair was probably giving you a little bit of confirmation. But even then, if you're looking at these two and seeing that the euro dollar is failing massively and the dollar yen is in the middle of a range on the hourly, and yes, there's the possibility it might go up there, but does it have to do it today? I think that you're taking a dangerous position. And if you had taken that, once it's closed and you're a fraction offside and you see these two closes, you're probably better just offering to get out. Now, I know that's easy to say once you've been stopped out, but again, if I look around and I'm unsure, then that's what I'm doing. So that's really what I thought of your euro yen trade. I just don't think it was a great trade. But I think the biggest problem that you had there is really being unaware of what the constituent pairs were doing, combined with the fact that you have really waited for it to go absolutely fucking vertical and then come in buying the smallest dip after it's hit range highs on an inside daybreak. You're putting yourself in a position where you could very easily be the weak hand, and sometimes that's going to happen, that you're going to willingly put yourself in that position because you might potentially see the possibility for a bigger move. And I think we discussed already, I know we've discussed at some point, where I put myself in a position in Euro GBP. If you remember, there was an inside week high and I bought above the inside week high, and the reason for buying is because we broke up and out on the hourly through this last low pre-break, through the range highs, and I bought this return, which had more of a pullback than yours did, but remember how fucking quickly I got out when I didn't like it. And you've got to be like that, I think. So that is what I wanted to cover tonight. I know some of you might look at that trade and think, oh, well, I didn't take that and that's not the kind of trade I would take. But I think it sums up my thoughts on what to do if you're trading the currency crosses, looking at these constituents. And again, just always trying to pick your trades apart. You don't want to drive yourself crazy. You don't want to be second guessing yourself all the time. But sometimes it pays to just think, someone's taking the other side of me. What are they thinking? You want to buy euro yen? Somebody's selling that to you. So now try and flip it on its head and think, well, what could they see? Now, we have no fucking idea what they see, whether they're even looking at a fucking chart. But what I'm saying is, I think that kind of thinking helps. What might they see? You're a chartist. Imagine they're a chartist. Can you pick holes in your argument that it's bullish? And if you can pick holes in it, then I think it's a weak trade. Nearly every trade I take, I can't pick a hole in, which is to say that I can't argue it from the other side very convincingly. And then I know I've got a really good trade. And that goes back to my philosophy of, if I'm stopped out, I want to be surprised. Now, when I got stopped out in dollar Canadian, I genuinely was surprised by that. Honestly, I really was surprised. I know I got, a large number of cunts sending me screenshots on Twitter going, oh, I fucking sold it. I made so much money on my 0.01 lot. But I was actually surprised that stopped me out. It's such a nice trade. Pushing this far down on the day, being very overextended into ATR, off a last high pre-break, which was also an inflection point on the chart. The vast majority of the time, that's going to be at target in fucking double time. But this time, it took me out, and then obviously it reversed very soon after I got taken out. But those are the trades I like. When I get stopped out, I want to be able to say, oh, I didn't see that coming. I don't want to be able to say, fucking hell, why was I buying that after it had rallied 300 pips and broken through an inside day high? Do I ever get back into a trade I've been stopped out of? Rarely. Very, very rarely. And that's not to say it's not a good thing to do, because I know a lot of very successful traders that will take a trade, be wrong on it, and then they'll see it come good and they'll think, right, okay, actually, maybe I had a stop slightly too tight, or maybe I misread the order flow, but now I'm going to get back in, and they'll end up recouping the loss and making money. The reason I don't like doing it and rarely do it is, back in the day, when I wasn't making money as a trader, and I had a lot of bad habits, that was one of them, stubbornness. I get stopped out, and then it would reverse, and I'd go, fuck it, I'm getting back in. If you remember, I made a joke when I got stopped out of gold. Where was it? It was here. So if you remember, when I got short off that low, price formed this candle here, it moved down, I moved my stop beyond the high, then puked the high, and immediately it begins to sell off. And I made that joke, and I sat here going, oh, I'm on fucking tilt, and I threw my chair across the room. I mean, I never threw my chair across the fucking room, but that's the kind of anger that I would have felt back in the day, like, oh, I've puked the high anyway, it's a big down candle, now it's obviously going to work, and I'd steam in again, and then I'd take a second loss, and I'd get super frustrated, and every time it looked like it was going to turn, I'd be fucking steaming in again. Here's a little shooting star, a few hours later, right, that's going to go now, I'm getting in again. It was almost like revenge trading. So because I associated getting back into a trade after I'd been stopped out with such a bad habit, I kind of just made it a rule going forward that when I look at a position, I'm going to have one stab at it. And I'm going to make sure that my stop is out of the way of structure, that the market shouldn't be able to pick me off easily if I'm right on it. I'm going to have one go, and if I get taken out, I'm moving on. And I really don't want you to think that that is the right way. That's definitely, I should never get back into a trade if I'm stopped out. But I have to tell you what I do. It's incredibly rare. I cannot remember the last time I got back into a trade in the same direction after stopping out. Unless, a couple of days had passed and it was a higher time frame bias and I thought, now it really looks like it's going to go, but certainly not quickly. I like to walk away, I like to recoup. I really think a big part of my edge is mindset. I've had this argument with people over the years because people say, well, no, edge is mathematical. It's nothing to do with fucking mindset. And I totally agree. Either you've got an edge or you don't. But the problem is there's a lot of people that have edge, but they don't have the mindset to execute it. There's a lot of people that don't have edge at all and then blame mindset. Oh, my mindset wasn't right. Well, no, mate, you've got no fucking edge. That's the problem. But having edge doesn't mean you're going to be a successful trader. And like I said, over the years, for me, I've had to come up with a lot of hacks to keep me grounded and to make sure that I don't make any of the mistakes like I made in the early days. A classic one, I'm sure I've told you this before, is the whole negative visualization thing. I'd used to get stopped out of a couple of trades in a row. No fucking way am I taking that third trade because now I'm scared. What if this third one's a loser? Has my edge stopped working and I won't take the trade? And that was what would have happened so many times, countless times in my career. And the hack I came up with there was just making peace with it before it happened and saying this will be a loser and it's absolutely okay, and actually visualizing the loser, seeing the amount that I would be down, because obviously you've calculated it beforehand how much you're going to lose if you stop out, and seeing the red in my account and seeing it almost go straight to my stop, and then I'd just be comfortable clicking the mouse because I've already made peace with it. Anyway, I think that covers it for tonight. I think it's a wrap. We've got the live day tomorrow. We'll have to see what it brings. I do think that the first order of the day will be considering shorts in the euro, the Aussie, might even have a stab at the New Zealand dollar. Not all of them at once, obviously, but it all feels like a little pullback will be enough to send this on the next leg lower. So I think that's going to be the first port of call. I'll warn you right now that I don't think there's going to be a lot happening in bunds. Based on when I last checked it a couple of hours ago, I can't really see a clear directional play, but we certainly might have something in swing. So let's see what we get. I'll speak to you at 7 a.m, ledges.